Okay, so again, welcome to MyCAP office hours. I am Keough for people that don't know me. I am the Director of Education here at College A Pro, and I'm usually the one who's doing office hours. I have worked with families and parents for over a decade doing this kind of work. So love helping families navigate the process. So this is basically a time for you guys to put questions in the Q&A. I recommend the I'd like you to put them in the Q&A versus the chat because then they're part of the recording so others can learn from your questions. And you can also click a box and be anonymous if you would like. Whereas in the chat, you can't do that. So if you've got some questions, definitely click on the Q&A and put them in there. Now that I've told you not to use the chat, if just for my own information, if you could just pop in the chat the age of your oldest child, like what year they're graduating from high school, that would be super helpful. Because sometimes I'll just share some relevant information during office hours. So it's good for me to see what grades I'm dealing with here. So if you can just go in the chat and put, like if you have a rising junior, you'd be putting 2024 because that's when they're going to graduate high school. If you have a rising senior, 2023, if you could just pop that in the chat. Oh, chat is disabled. Hold on. Thank you for telling me that. Seems to be attendees can chat with everyone. Okay. I think I got that fixed. Thank you, Jason. It seems to be defaulting to disabling chat for some reason. Okay. Now you guys should be able to get in. There we go. 2024. Okay. So we've got some rising junior parents, rising senior. Okay, we got a 2022 graduated senior. Congrats, you have one starting. Because I was just going to talk about, we do have a couple rising seniors. Okay. Because if we don't have questions right off the bat, I can talk about some things that would be relevant. That would be relevant for rising seniors, and then, rising junior parents, you'll know what's coming up the pike about a year from now. But what questions do you guys have? This is really your time to ask your questions. You got me here. Pretty much willing to address anything. If you have questions about MyCAP, you should all be in the software. So I recommend you, if you haven't spent a lot of time in there, definitely get in there and put in your school. So this is also a time, if you have any questions that you've been in MyCAP and you have some questions about how to use it, and maybe I'll go in and give some tips and tricks on that as well. I don't see any questions coming in just yet, so don't be shy. That's what we're here for. But why don't I take a minute? One thing I want to talk about, and this will be, again, most relevant to parents that have rising seniors, because what's going to happen this fall is the financial aid forms are going to go live. So there's two forms. There's the Fafsa, the free application for federal student aid, and the CSS profile. So all the schools, most likely all the schools that your child is applying to will require the Fafsa. Most schools only require the Fafsa. But then there's about a little bit less than 300 private schools, mostly private. There's a few state schools in there like UVA and William and Mary and University of Michigan, UNC Hill. Most are private. They not in lieu of the FAFSA, but in addition to the FAFSA, the CSS profile is required. So that's a separate form. I'm just looking in the chat. Okay, I'll answer the question in the chat, but if you actually, could you paste that question into the Q&A? I'll answer it, but just paste the one that's in there about loans, just paste that into the Q&A so that we've captured it. But the question is, my son is applying for federal unsubsidized loans and he wants to have the best learning resource. Where would you recommend to look at? Learning, I'm assuming, are you talking about understanding unsubsidized direct student loans? Is that what you mean by learning resource? That's what I'm assuming you mean. If you could just respond to that, just so I know. Yeah, because there's a question about unsubsidized federal loans. So as far as how those work, all you need to do to get a direct student loan is submit the FAFSA. If your child does not submit the FAFSA, then you cannot get a direct student loan. So you don't really apply for them. Students are automatically eligible if there's a FAFSA on file. Then the college will award the student loan, and then the student's required to do some online loan counseling before they start, and then they will electronically sign a loan promissory note because it's a loan, right? So that's all you need to do is the online loan counseling. There is no application for the direct student loans. The only application is submitting the FAFSA. That is something that I wanted to talk about tonight. In order to submit the FAFSA, the student and the parent that is submitting the FAFSA needs to get what's called an FSA ID, and that stands for Federal Student Aid ID. And what that ID is used for is to e-sign, to electronically sign and submit the FAFSA, which almost all FAFSAs are submitted electronically. Okay, thank you for putting that in. Could you please give us my son is applying and he wants to know where to start. Oh, that's what I'm talking about. Okay, so where you start if you want those loans for, yeah, and they said about, how about grad school? Does the student have to file a FAFSA? Okay, so I'll address these one at a time. So if you want to get the direct federal loan, you're going to submit your FAFSA. To submit your FAFSA, you need to electronically submit it in most cases. So you need an FSA ID, a Federal Student Aid ID. And I am going to share my screen and I will show you exactly where to get that. And I'm going to I'll post it in the chat. Get the page here. Here we go. So you're going to end up on this page. Okay. And when you're on this page, you're just going to hit get started. So I'm going to post this link in the chat so everybody can grab it. If you click on it, it'll open in another tab, and then you can look at that when you get back, when you get off of office hours. You're just going to hit get started, and what it's going to ask you to do is put in, and this is, you're going to, again, one for the student and then a separate one for the parent. So whichever parent is, if you're married, whichever parent's kind of working with your child, whichever one is kind of taking the lead on it, it doesn't really matter which parent. Either parent can get the FSA ID. If you are divorced or separated, then the parent that is submitting the FAFSA with the student is the one that should get the FSA ID. And the custodial parent is the parent that is supposed to submit the FAFSA. And the definition, the current definition, excuse me, of custodial parent is the parent where the student has spent the most time and a year look back when you're about to submit the form. So these forms go live October 1. You're going to submit that form, I'm just making up a date, October on Halloween, October 31st. It's literally a year look back. Where did your child spend the most time? And if you're a family you live close by and it's 50-50 custody, so your child goes back and forth between the two parents, then you should do a little planning to figure out which parent makes the most sense to submit the financial aid form. It should be the parent where you're more likely to get need-based aid, but you have to follow the rules. So if in reality your child spends the most time with you, and it's now almost August, and you're going to submit this form in 2.5 months, and your child's basically lived with you, then you're the custodial parent. But if it is a 50-50 situation, then over the next few months, you can just make sure that your child spends more time, sleeps over at the house that makes the most sense, if that works out for your family. It needs to work out emotionally and be a good thing in your family. I'm not telling you what to do. I'm just saying that there is this opportunity with divorced and separated families. If you're amicable and if it's 50-50 custody, you might as well play the card that you have and have the parent submit the FAFSA that will basically be better for potential need-based aid, right? An expected family contribution gets calculated from the FAFSA, and the lower your EFC is, the better, because that's what the colleges think you can afford to pay for 1 year of school. So whichever parent, if you're divorced or separated, is the custodial parent, that's the parent that needs to get the FSA ID, and then the student always needs to get the second one. So what you do is just follow the prompts here. You're going to fill this in. It's going to ask you to create a username and a password, and then ask you some security questions. So you want to go ahead and do that. If you have a rising senior, I'd go ahead and do that now. Again, I put it in, you've got the link in the chat, so go ahead and click on that. You're going to want to do that now. It takes not long to process, usually 2 to 3 business days. You get an email confirming that you created it, and then you get an email once it's been approved. I just wouldn't wait until right before you're submitting the forms, because that can it can get backed up, right? And it can take longer, and then you're stressed and you're trying to meet deadlines. So just do yourself a favor and go ahead and have your child get that, and get whichever parent's going to get it, go ahead and get it. And then definitely keep that in a safe, secure place, because you're going to be submitting the FAFSA every year to the colleges. So you're going to need that. It's not just a one and done. So you want to put that, like I have a password protected password sheet. So spreadsheet. So wherever you keep your passwords, you're going to want to keep that, because you're going to need it again. Okay. And just remember, if you have 2 kids in school, because somebody put in here when I asked, they've got a 2022 and 2024. When your next child comes up, that second student is going to be creating, your second child is going to create their own FSA ID, because it's the student's FAFSA. It's not the parents, even though in most households, the parents do the lion's share of putting in the information. It's technically the student's FAFSA. So the FSA ID, like I said at the beginning, is used to electronically sign the form. You can also log into the FAFSA with the FSA ID of this, not the parent, because remember, it's the student's FAFSA. Let me share my screen again, and I'm going to show you as far as finding the FAFSA. Once you have your FSA ID, everything's live, and you're going to go to fafsa.gov, and it's going to take you to this other URL. And if you're returning, you hit there. But if this is your first time doing the FAFSA for your child and with your child, you're going to click here. And then it's gonna take you through the process and ask you, are you the parent? Are you the student? If you say you're the parent, you can actually log into the FAFSA with your child's name, birthday, and social security number. You're still going to need that FSA ID at the end, but before it's submitted electronically. The student will have to put theirs in, and you have to put yours in. But that's how this works. And when you get here, when the forms go live, it'll say on here, if you have a rising senior, you're submitting the 2023-2024 FAFSA, right? Because remember, you're submitting it for next fall, 2 falls from now, right? When your child's starting school. So just make sure you pick the right year for the FAFSA, okay? Okay, so that's that. And the question was about what we need to do. So all you need to do is apply for that. As far as information about how these loans work, if that's what you're looking for, here, I'll take a couple minutes. I'll take a couple minutes and I'll explain that. Let me pull up I'm just going to pull up a quick slide that got too many windows open here. Let me just get to my desktop and I'll open up a quick slide for you. And it's just easier, I think, for a lot of people to show you a graphic instead of just chatting away here. So let me share my screen again and I'll pull up this slide about these loans. Okay. So these are the direct student loans. The numbers along the left side here, in your question, you said unsubsidized. I just want to make it clear for people, other people on here. If you have financial need, part of this loan could be a subsidized student loan. So the numbers that you see on the left, those are the maximum subsidized loans that most students can get per year. So that totals $19,000. If you have no need, then they'll give you the numbers on the right here. That's the maximum direct loans you can get for each year of college, unless you're an independent student and there's some special circumstances, but for most kids, this is correct. So $5,500, $6,500, $7,500 the last 2 years. If you have need, then what the college will do for freshman year, for example, is they'll say, here's your $3,500 of a subsidized loan, and then they'll always give you an extra $2,000 of an unsubsidized loan. So it totals $5,500, but it's a different breakdown. Like Bill Gates's kids would be awarded, obviously, the unsubsidized loan. So that's how that works. The interest rate is fixed for the year that you're awarded. And the new interest rate for this coming school year is 4.99. It went up quite a bit, about 30% from last year. It's based on the 10-year Treasury note. So as we all know, interest rates are going up. The Federal Reserve is meeting again this week. They're probably going to go up potentially 75 basis points or a whole percent. So this interest rate will probably be more for the 23-24 school year, but you'll know before you are going to accept it. These loans are use it or lose it. So that means you really want to plan out your 4-year payment strategy before you don't accept these, right? Because you can't, if you use up all your money freshman, sophomore year and 529s and then say, oh, I want to go back and get those good student loans. I'm out of 529 money. You can't go back and get them. So you want to make sure if you don't accept them, that you have a really good reason. And if your child's thinking about grad school, that's another reason. Even if you have enough money to pay for undergrad between different sources, cash flow, your savings, grandparents' help, whatever it happens to be, you should still think about this and be forward thinking. If you have a child that definitely wants to get a PhD or go to med school or get like my daughter got her master's in social work right off, right? You want to know about that and plan for it, because the direct loans that are out there for grad students have a higher interest rate. Like for this year, instead of 4.99 for grad students, it's 6.54, and there is no subsidized version. So a lot of grad students have very low expected family contributions because they don't have any income and they don't have a lot of assets because they've just finished undergrad, right? But that doesn't, it's not like undergrad where the government comes in and says, hey, here's a big fat subsidized student loan that we're going to cover the interest on. They don't do that. So keep that in mind in your planning. Sometimes it makes sense to take some of these loans so that when you get to grad school, you might have more savings to help your child with grad school, or you might have 529 left or whatever the circumstances. So just keep that in mind. And it's the same thing for grad school, because that was part of one of my questions here is Let me get rid of that one. You know, how about grad school loan? Does the student have to file the FAFSA too? Absolutely. But when they mark that they're a grad student in the questions, then they're automatically considered what's called independent. So most schools will not ask for parent assets. The FAFSA definitely won't, but I have seen schools that med school, for example, some med schools that say we still want mom and dad's financials, and it is what it is, right? Then that's your choice or your child's choice to apply to that med school. So some of them do that. So, okay, here's another question. If I didn't get any federal aid last year, my income has gone up. Is there any reason for me to do the FAFSA again? I'm a big advocate for doing the FAFSA. One, it's free. Two, you're sharing your personal financial information with the government, but it's not a third party. You're filing your taxes. They're getting it anyways. Three, some schools require a FAFSA to be on file if your child is receiving merit aid, which is the non-need-based aid. It doesn't make sense that they would require it, but there are some schools that do. Even the CSS profile, there's a few schools that require that. And then another reason is if you were to appeal, colleges, we have been told by colleges, they're never going to say this to parents, but we've been told by colleges that if a family is appealing for more money for different reasons, and we see that they did not submit the FAFSA or they did not accept the direct student loans that were offered to them, they think, well, how hard up can the family be? So I recommend submitting the FAFSA for all those reasons. And also, you know, things can change, life can change, right? Look at what's happened to all of us with COVID. You know, people's livelihoods were a certain way, and a month later, we're on shutdown, something that was inconceivable, at least to me. The idea that we wouldn't be able to leave our house, it was just a crazy thought, right? Before all that happened. And then all of a sudden, you know, people had businesses that they couldn't run. So things could change. And if that FAFSA is on file, it's easier to reach out to them, right? It's easier to reach out to them. That's my opinion. It's not wrong to not submit the FAFSA. I've gone through this question over and over again with parents through the years, and there's some parents that just are totally against it. And I tell them, all right, well, you might leave some money on the table. It might hurt you in the long run. It might not. But I recommend that people submit the FAFSA for those reasons. To your point, if your income went up, you're probably not going to get any need-based aid. But if things change, God forbid, somebody becomes disabled, you know, life can change. So can we create the account now, or do we need to wait until October 1st? If you're talking about the FSA ID, you absolutely can create it now. You should create it now. If you have a rising senior, go in and just get it done. Definitely. Just definitely get it done. If you're talking about submitting the FAFSA, no, you cannot submit the FAFSA until it goes live. So if you have a rising senior, it's going to go live October 1. If you have a rising junior, it's not going to go live until October 1, 2023. So if you're a rising junior, sophomore, or freshman, you're not even thinking about getting in there and submitting it. If you're really kind of nervous about it, you can pull up a draft, but the FAFSA is going to change considerably for the 24-25 school year. So the FAFSA that rising senior parents are going to submit this fall is going to be different unless the government doesn't implement the FAFSA Simplification Act in time and postpones it. It's going to be very different in a year from now. So looking at it probably won't help you, and it's going to get simpler, much less questions. So I wouldn't recommend looking at that ahead of time. But yes, you can get the FSA ID now, but no, you cannot submit a FAFSA right now for a rising senior. The only people that can submit FAFSAs now are people that have kids going to college this fall. Okay. If the child is a dependent of a divorced parent by their divorce agreement, but lived with another parent majority of the time, can the parent who the child who the child lives with the custodial parent. Yeah, the custodial parent is defined as from the time you hit submit on that form, literally, when you hit submit, it's a year look back. Where did the child live longer? It doesn't have anything to do with the divorce agreement or who's claiming the child on their tax return. That doesn't matter in financial aid. It's literally that year look back. And that is true for this coming year. That's going to change. But for this coming year, if you have a rising senior, that's the definition of custodial parent. So you should strategize and choose the parent that makes sense. And if you're not sure, if you're in MyCAP, you can go in there. If you need some help, support around that, you can book an hour with an expert, get in the weeds with one of our CAP experts and play around with the numbers and put in one parent's numbers and the other parent's numbers. You know, we're happy to support you with that. And I'll show you in the software how you can sign up for meetings. So it is going to change. So just to make things fun, that's how it's worked for years. That's the definition of custodial parent. Starting with the October 1st, 2023 FAFSA, unless changes are made, it's delayed, which right now we're not hearing that it's going to be delayed. For divorced and separated families, the custodial parent definition is changing to the parent that provides more financial support. So the big question is going to be, there's a lot of areas that you can, you can financially support your child, right? You're paying the mortgage, you're paying for soccer, you're paying for food. So how that's going to get interpreted, that's wide open right now, but it's going to change to that. So if one parent provides a lot more financial support and you're submitting the FAFSA this fall, you might have to change who the custodial parent is, because that can change every year. That doesn't have to remain the same, even with the current rules. So for a lot of families, it might change. The rest of that rule changes if both parents provide equal financial support. Then it's going to be the parent that makes more money. And I'm guessing that'll just be like which parent has the higher adjusted gross income. It might be how they look at that, because that's a pretty easy way to know that. Okay, so that's that. My child is a rising junior. Does the FAFSA have a demo simulation site that I can plug numbers in to see what my EFC would be? Or should I only sign up when she is a rising senior? No, you should set up a free MyCAP account right now, because you will see all three of your EFCs if you set up a free MyCAP account. Let me show you. Let me share my screen again, and I'll show you that. You should be in the MyCAP community if you're on office hours. So I think that was it. Let's go over here. So this is the URL for MyCAP. Okay, right here. I'm going to put it in the chat. Oh, and I see a question in the chat. I'll answer it real quick since I saw it, but please put your questions in Q&A, and you can mark them as anonymous if you want. The question is, are you required to submit the FAFSA every year for 4 years? Yes. Every year you're going to have to submit the FAFSA per child. That's yes. Okay, in the chat, I just put the URL. So you can click on that. It's basically mycap.collegeapro.com. You're going to end up on this page. And if you're not in there yet, you click get started for free. And then you create a username and password. So I'll show you here. Let me just make up an email here. See if it's not in the system yet. And I'll show you. I'm not going to go through the whole thing, but we'll go through it. And then you just create a username, which is your email, follow the rules, password, and then just hit create account. What did I do here? Oh, I think I put a space in there by accident. Doesn't like that. Okay. All right. Then it's going to go ahead and create your account. These are the 3 ways you can go into MyCAP. So like I said, you can create a free account. or you can do a full upgrade, and I can go in and explain that. But basically, the big difference between these two is unlimited schools on the Scholar, which is the full platform upgrade. There's an advanced search where you can search for schools based on the most merit, the most need-based aid, or you can book an hour, like I said earlier, with one of our experts. This is a great deal because if you book an hour, you automatically get 1 year of a free upgrade right now. That might go away in the future, but that's what we're offering now. So it's great. You don't pay the $149, you pay $299. You can book your meeting when you're ready, and then you've got the full platform. So you just pick whichever one you want to do. And then once you pick it, say you click get started for free, it takes you right into onboarding. You answer about 3 minutes of questions and you're in MyCAP. And then I will show you, I will log into one of my accounts because, see, that's Fafsa in my session with Fafsa. Let me go back to MyCAP. I'm going to log in and I'm going to show you. Okay, I don't know why it did that. Let me get out of there. I'm going to log in and put in one of my sample ones so I can show you. As the person who asked the question is asking where to figure out your EFCs. They're right up here. Once you onboard into MyCAP, you're going to see your federal EFC, which is the one from the FAFSA, an institutional EFC estimate. That's from the CSS profile. And then this consensus EFC is a subset of those. It's just a group of about 15 schools that require the CSS profile, but they calculate the EFC a little differently around home equity and around student assets. So this tool is free. You go in here, you plug that in, you got 3 schools, you can put in up to 3 schools. You get a lot more information than just the EFC. So that's where I recommend you go. Going in and doing the FAFSA isn't going to give you your EFC. And then this will start projecting what you're going to get from different colleges as well, as far as discounts between merit, the non-need-based aid, and the need-based aid. So that's what I highly recommend that you do. Okay. And this is a perfect time for 2024. The other thing, while I'm here, let me just show you while I have it on my mind so I don't forget. Once you're in here, if you're in the free version, this is an upgraded version, but if you're in the free version, it'll say upgrade up here and you can click on it. And at any time you can go to the full platform or you can book a meeting. If you're already in the full platform, then it's going to look like my sample here where it says book expert consultation. And when you click on that, you're going to go in and say, yes, I want to do this. It's going to ask you for your payment information. And then you're going to be able to pick, we have several college planning experts at CAP, and you'll be able to either pick the first available or go on the drop down and look at all the experts like I do. I'm one of the experts, and you can pick somebody if you know them, and then you get to see their calendar, you book your meeting and you're good to go. So it's really easy to book the meeting if you need it. And we have people booking meetings to review financial aid forms. Like, we don't submit them for you, but if you've done the best you can and you need somebody to look it over with you on Zoom, when I do that, basically when we're done, they're ready to hit submit and they can get it off their plate. So for some people, that's really helpful. Okay, so let's get back. Let me get back to the questions. What's the difference between the subsidized and unsubsidized? And can we accept it but not use it until later? The difference between the subsidized and unsubsidized is the subsidized portion, there's no interest accruing until 6 months after the student graduates. So it's basically free money, right? It's kind of a no-brainer. Why not take that if you're awarded the subsidized version? The unsubsidized is the same loan, except when that loan is dispersed, interest starts accruing. For either type, subsidized or unsubsidized, the student doesn't have to start paying it back until 6 months after they graduate. They can start paying it back anytime though. Like, I have kids that graduate, have a good job, they've got unsubsidized loans, and they start specifically paying those off because there's interest accruing. And then, after 6 months, the subsidized version is going to start having interest. But that's the key difference. Basically, the government is paying the interest on those loans. So that's the difference. And then, can we accept them and use them later? No. When you accept them, if it's a school that's on semesters, half of the loan, say it's $5,500, half of that will hit up on the bursar bill as a credit, and there's an origination fee, but it's about 1%, so it's not a lot. That half of it minus the 1% will hit up, and it'll lower the balance due. You can't say, oh, I'm going to accept it and use that sophomore year. It's use it or lose it. Like I said, you can't do that. I just said something else I was going to say, but I lost my train of thought. Oh, I know what I was going to say. Quarters. If the school's on quarters, they divide the loan amount by 3, and a third of it hits up on the bursar bill each time minus the origination fee. So that's how that works. My son already has the approved unsubsidized federal loan. So which page should he go to in order to borrow the approved amount? Yeah, basically, once your child has accepted admission somewhere, they're going to have a portal, and that's where they're most likely going to register for all their classes. There's a financial section. All the colleges' portals are obviously a little different. They're not all the same. They're not hard to navigate. I mean, I had 2 kids, and they were, you get used to it very quickly because you're in there to pay the bills. There's a financial section, and in there, when the bursar bill comes out, you'll see it. And like if your child got $20,000 in merit aid and it's a semester school, say the tuition's $40,000, say room and board and tuition, just for ease of math, is say $60,000, right? So it's a semester school. So the total bill from the college for the first semester is $30,000, right? And say there's a $20,000 merit award, $10,000 will come off the first semester, right? So then you're down to 20. And then any other loans and anything else comes off, and it's divided by 2 or 3. That's how it works. Once it is borrowed, how soon will the money be sent to the college? It's basically, it's there, right? You sign the promissory note, you accept it, you do the loan counseling, you sign the promissory note, and then it's going to automatically hit up in that bursar bill. That's how it works. And they know when their bills are due, right? So if a lot of students are taking direct student loans, which a lot of them do, they make sure those loans are dispersed so that they show up as a credit on the bill for the family. When is the earliest time that was advised to submit the FAFSA after it goes live, particularly when we want to get admission through early action? So that's a great question. Every school has their own deadline. So schools have deadlines for admission applications, and then they have deadlines for financial aid applications. So they're not always the same, right? And they're based on how you apply for admission. So to your point in your question, you're mentioning early action. That's an earlier deadline to apply for admission. So early action is most likely going to have an earlier priority financial aid form deadline. So you just need to Google that and look that up for each one of the colleges, and make sure that there's a few colleges out there that are first come, first serve. So if that's the case, then you want to get the FAFSA in as soon as possible after October 1. To be honest, on October 1, a lot of times it's a bit of a mess inside the FAFSA. It doesn't work well. It crashes a lot. Sometimes the first week it's like that. So what I would do is whatever your child's list is, all the schools have them, or if you want to help them out and you do it, make sure you know the deadline for applications, right? And usually the application deadline means everything, right? It means recommendations are in, test scores, if they're being sent, all of that stuff, a complete application file, and then see what the respective priority financial aid form deadline is. So it could be as early as November 1 with early decision. I've seen November 1 with early action. It could be as early as November 1. I don't think I've seen it before that, but honestly, there could have been a time where it was in middle of October, right? It's never October 1 or something. You have time to do it. But that's the key thing, is to look up what the school's deadlines are. And then what I always say is shoot to have it in like a week before the earliest deadline of your, say your child's applying to 9 schools, whichever one has the earliest deadline, or there might be some of the same day. You know, don't wait until the night before, because if there's a storm or you lose internet, then you're late, right? You don't want to be late, especially if you're eligible for need-based aid. So that's what I recommend that people do. Okay. All right. And Googling defined deadlines is usually the best thing to do, because sometimes it's kind of buried. Just Google freshman year priority financial aid form deadline Vanderbilt or whatever. And it's different for upperclassmen. So you want to make sure you're looking at a freshman year deadline. If your child's a rising, going to college for time, earlier, they're typically in the fall. Regular admission, they could be January into January, regular admission for applications, but they're always earlier than upperclassmen. So don't get mixed up and look at an upperclassman deadline, because that's going to be way later than an incoming freshman. So just keep that in mind. Okay, regarding CSS, are custodial parent and non-custodial parents' incomes and assets treated the same percentage? Yeah, so what happens with the CSS profile, as you're hinting to, is still the custodial parent is still going to submit the main CSS profile with your child. But when you say you're divorced, they're going to ask for the email and information of the non-custodial parent. Then they're going to shoot an email to that parent and say, hey, you got to submit the non-custodial CSS profile. Most schools look at both sets of parents, not all of them, but most of them do. So there's a lot of wiggle room when it comes to the CSS profile. It's not as transparent as the FAFSA. So I can't tell you certain percentages that the schools look at a custodial parent versus a non-custodial parent. If neither one of you are remarried, they do have the philosophy that parents need to have skin in the game, right? They need to, even though if you talk to a lawyer, they're going to say, once your child's 18, you really don't have any more responsibility for them. And some parents feel that way, right? And it's a problem to get financial aid because they don't want to submit forms. So I can't really tell you, are they treated the same? At a lot of schools they are. At some schools they might weigh them differently. If one parent is remarried, that does change things. They're in the institutional, which is what we call it in the industry, institutional EFC, which is basically saying schools that require the CSS profile. They're supposed to look, if any of the parents are remarried, they're supposed to look at the biological parent, the biological parents, and not look at the remarried parent. So that's another thing to just kind of keep in mind. The step parent, if one of them is remarried, but they do weigh both parents, but I can't tell you, they don't all do anything the same way when it comes to the CSS profile. It's much less transparent. So when you're looking at estimates for EFCs, the institutional estimates, just realize that there can be a swing of literally $10,000 or $15,000 between two schools. And again, that's a great reason to be in MyCAP and doing things in here, because when you get in here, I'll show you this. We have some things built into MyCAP that we know about schools. You can see here that in my sample family, the institutional EFC estimate is 80,000. Stanford requires the CSS profile. So you could be saying to me, well, Peg, what the heck's going on here? 81,000 and 80,000. Well, that's $1,000 difference. Why are you projecting a net cost that's so much lower? Well, Stanford does not look at home equity, meaning the market value of your home minus your mortgage or mortgages. If you have like a HELOC or something else, they don't look at that, right? Most CSS schools do, but Stanford does not. So for my sample family, they have a lot of home equity, and Stanford's just not including it. So that's an example of a huge shift. And MyCAP has that built in, right? So you guys probably didn't know that, but we know it. So we've built it into the tool to support you through this process. If you look at Northwestern, also requires the CSS profile, very different net cost, right? Because they look at a lot of the home equity, right? So these are these little nuances in the CSS profile calculation that are, yeah, it gets a little crazy. The other thing we have built in here when we're projecting is it's not just a calculator. It's not just something that says, like if you look at UCLA, 68, almost 69,000 minus 51. Wow, that's like 18,000 of need. Why is the student not getting any money? Well, that's because the student is not a California kid, and most or many state schools do not give need-based aid to out-of-state kids unless they have very low EFCs. So we understand that. We've been doing this for years, so we built it into our projection. So we're really trying to show you your EFCs, but this is the tip of the iceberg up here, right? Because some people, there are some strategies to lower your EFC. Not everybody, not 50% of people by any means, but once you know your EFC, then you can figure out where you can get the discounts, because every school is discounting their sticker price, every school. But you could apply to a UCLA and not realize, oh, I'm not going to get a discount there. So do your homework, get knowledgeable, so you know ahead of time. If your child's going to apply there, it's fine, but do it with your eyes wide open, knowing you're not going to get any, probably not, they give a little bit of merit aid, not much, out-of-state kids, but you're not going to get any need-based aid, even if you have need there, right? So know that ahead of time. It can save you a lot of heartache that if you have a bunch of schools like that, and then they're not affordable, right? And your child goes through all the work to get in, and then you realize later that it's not affordable. That's our whole thing at College Aid Pros, to empower you guys with this information so that you can shop for college in a smarter way. So, all right, let me go back here. I tend to go off on my little not soapboxes, but diatribe, whatever you want to call it. But I think it's usually helpful to people. Does it make sense to pay for upgrade for rising junior or wait until my child's a rising senior? No, I'd be doing it now. You need to know this information. Junior year is when your child's going to be building their list, right? You might start going on college visits now that people are visiting colleges again, right? So you want to understand where you fit. Are you a family that has super high EFCs? So merit aid, the non-need based aid, is what you need to look for. You want to know that before you go visit like Stanford and Cornell and Harvard, and then realize, oh, they don't give any merit aid, so we're going to be paying full price, and that's $85,000, right? You want, if you wait, you're not going to know that sort of stuff. So I recommend getting in there and doing it now. Does the IRS still give credit for college kids? Yes, there is a tax credit, and it's called the American Opportunity Tax Credit. We call it AOTC for short. So American Opportunity Tax Credit. I'll put that in the chat. Forgot the second word. I put it, tax credit. And basically, it's a $2,500 credit per child. So if you have 2 kids in school, it could be up to $5,000. There is an income limit, just like a lot of these things with the IRS, from 160,000 to 180,000. That's when it starts phasing out. So if you make 220,000, then you're not eligible for AOTC. But if you make under 160,000 or between 160 and 180, under 160, you're eligible for the 2,500. Between the two, it starts getting phased out. Okay. The one thing to know ahead of time about this is that in order to be eligible for this credit, you have to have the income requirement that I just shared, but you also have to spend $4,000 on tuition and fees and or books that is not coming from another tax advantaged instrument. So for example, a 529, or if you live in a state that has a prepaid tuition plan, like I'm in the state of Washington, we have something called the GET, Guaranteed Education Tuition Plan. That's a type of college savings plan. So your contributions billed tax-free, and when you pull them out, you don't pay tax on the earnings. That's what happens in a 529, as long as you're spending it on qualified education expenses. So the IRS doesn't let you double dip. That's what they call it. So you can't get a tax break from the 529 and then say, hey, I took 4,000 out of my 529. Now I'm going to get a tax credit on that 4,000. So you want to make sure, if you're eligible, that you're spending $4,000 on tuition and or books, not room and board. That's not part of the IRS rules for some reason. So it's a great credit. So you want to make sure that you understand that. And a lot of people fall into that trap their first year because they don't know. And then they go to do their taxes and the accountant says, well, yeah, no, you can't do it because you took all the money out of your 529, or you use savings bonds. Anything where there's a tax advantage, a tax savings. So if you pay it out of cash flow or anything where, again, no tax savings. And when I say tax credit, what I mean by that is, if you file your taxes and you owe $15,000, right, you would then owe $12,500. It comes right off of your tax liability. So it's a really nice savings to take advantage of if you can. Okay. So to be clear about the $5,500 federal loan, the school will automatically take half for the first semester and half for the second. Do I need to tell them whether or how I want? No, you don't have to tell them anything. That's how they're going to do it. If it's quarters, they divide it by 3. If it's semesters, they divide it by 2. They take out the origination fee and it automatically hits up. And if you don't get awarded and if you don't see direct student loans on your child's award letter, and I'm saying this a little bit for rising senior, and everybody else can kind of put it in their head. Even if a college meets all of your need with grants, which is lovely, that's much better than loans, and you still need the loans, those are the best loans out there, then and you don't see it. I just helped a woman about a month ago, and she said, what do I do? I said, you just call the financial aid office and say, hey, I submitted the FAFSA. My child would like to have the unsubsidized loans as an option. And they should put them on there, and then you just accept them and you're good to go. So if they don't show up, don't panic. You can just call and ask them, but they cannot give you subsidized student loans if all of your need is met. So if you have 20,000 of need and your child got a $20,000 merit scholarship, even though that's not for need, that's still the college's endowment money. It still goes into the same bucket. And so they're meeting need. Federally, they're not allowed to award you subsidized unless there's some need. And they can just give, say there's 800 of need left over. I've seen that before, where they'll do 800 of subsidized and the rest is unsubsidized. But yeah, in answer to your question, you don't need to do anything. All you do is submit the FAFSA, make sure your child does the loan counseling, make sure they sign the promissory note, and then it'll show up on that bursar bill, divided by 2 or divided by 3. One thing I will say in this space is a lot of kids, and I know my kids are a little older now, but they don't use email that much, right? The colleges, unless it's changed, they do communicate via email. So tell your kids that they need to be on the lookout for emails from the college. Once they accept somewhere, they'll have their peg.keough@vanderbilt.edu, like they'll have their student email, and they want to check it regularly because the college could be communicating about this kind of stuff, about go do your loan counseling, or communicating about, say, taking certain math and English, tests online to see where they place for their courses for their freshman year, just a whole bunch of stuff, right? Just tell them to keep an eye on their email. And if they get something they don't know what it is, they should forward it to you. And so you can go through it with them. What is the source of MyCAP data when giving projective EFCs and net costs? So there's a couple sources. We update the software every year on the need-based side from a source called Peterson. So that's updated annually, and actually will be updated pretty soon for this coming school year. The merit awards, which is the non-need-based aid, we have a lead data scientist at CAP, and she has a team below her, and we are we have a proprietary process where we go to colleges' websites, we do in-depth research about how they're awarding merit aid, and that's where all of that data comes from. And I can show you when we go in here, this is what I'm talking about. As you guys noticed, there's projection here. So let's look at like Oglethorpe in Georgia. Big difference in net cost. So we're telling you when we get to the page, that's what we would project in need-based grants, but obviously the merit award for the student is much higher. So that's what's going to come in. But we have a merit database in here. So all the merit awards are in here. And if we have enough data, if the college is transparent about how they award merit aid, it will auto click. If it doesn't auto click, this is your tool. Go in and look, right? And if you think what is auto clicked is too aggressive or too conservative, you can always change it as well. So that's where the data comes from. So we're constantly updating the merit as we get more information. We also, in MyCAP, you can upload award letters when your kids start getting financial aid award letters from the colleges. So people that have rising seniors, you're going to apply, then you're going to get what's called a financial aid award letter. We look at those and we tweak what kids might be getting based on what we see the college is actually doing. So it's pretty robust and it's proprietary. And we actually, I'm going to go quickly grab, I should have thought of this before. I'm going to go grab, we are doing a webinar tomorrow night, Matt Carpenter and myself, on like kind of the whole Financial Aid 101, how does all this work? And we're going to actually talk about the Fafsa Simplification Act a little bit as well. So I recommend, you register for this. If you're in the community, you should have gotten invited. So I'll go grab the link real quick and I'll pop it in here before we finish. There's one more question. Why do we have to use MyCAP in each year by purchasing each year? Is it because we are filling out FAFSA each year or any other advantages? No, it's a planning. If your child's in high school, it's a planning tool. So as you continue to learn about schools, it's a tool to say, okay, we know our EFCs. Is there any way to tweak our EFCs, move money around, anything that can help us? But once you're in there, most families starting junior year, you're going on visits, then you're looking at those schools. You're constantly building the list. So if you have a rising junior, you're going to be building the list and probably not finalizing it till senior year. And then senior year, as I just said, it's not just looking at EFCs. There's a lot more to MyCAP than just EFCs. That's the tip of the iceberg. Then you've got all your projections. As you visit schools, you can pop new schools in. If you're in the Scholar version, there's an advanced search. So once say you don't have any need-based eligibility, like your EFCs are kind of high, they're 90,000, 100,000, then you can go in here and do a search and say, okay, I want to look for engineering schools in California. That's my child really wants to study engineering and really wants to go to California, which is pretty common where I am in Seattle, right? Then you get this list, which is fine, but then you can sort it by what matters to you. So if you realize that you aren't going to get any need-based aid, then you care about scholarship money. You can sort it by all these different things, but then you would sort it by scholarship money. And then we're going to suggest schools to you. Doesn't mean they're a great academic and personal fit, but we're going to show you schools and say, hey, your child, we're projecting to get 30,000 of merit at Whittier. It's in California and they have engineering. You can say, I don't know anything about that school. I'm going to add it to my list. So you're actively using MyCAP to build the list. Then once your child gets in, then you can go in here and actually upload award letters, right? And you can see what your remaining cost is. You're not planning anymore. Now you're actually seeing what the college awarded, and you can compare colleges, right? You see here, really big difference between Stanford and Cornell. You might want to be appealing to Cornell if that's really where your child wants to go, right? So it goes into senior year and takes you through that. We also take you through affordability. So when you're looking at these schools in the planning phase, what is your funding gap? We ask you how much you can afford. It's not just about knowing your EFC, like how much can you afford? What's your projected 4-year cost? What are you bringing to the table? And what's the delta? Oglethorpe and Stanford look great with this school, with this family. Northwestern and UCLA are a lot more expensive, right? DU, University of Denver, not too bad. And then we show you about the loan. So if you're in the free version, spend some time in here on those 3 schools. This is really robust. There's a lot to guide you here. And we have office hours and we have webinars and we have all this other stuff that's completely free to you to help solidify your learning and to continue your learning. And then we have a how to pay, where you look at how are we going to pay for this first year? This is with the actual numbers from the financial aid award letter. And after you appeal, you can go in and change those numbers. So this is all senior year. So if you don't renew for senior year, then you don't get this. We have resources in here. If student loans are part of what you're going to do, you can go in and compare private student loans through the door. You can put in your child's school that they want to go to and pull up loans. It's just loading right now. You can put up, sorry, we're over a little bit, so I need to hop in a minute. But okay, I think I hit all the questions. I just want to really quickly, I want to give you guys the link. Just give me 1 minute here. I just have to log into, I just want to grab the link here, because if you guys weren't invited, and if you can't make the webinar tomorrow, it's fine, because all you need to do is register, and then you'll automatically receive the recording and a copy of our slides. So you don't have to worry about having to be there live, because I know, hold on, I'm just, I gotta log in here, grab this password, because I don't know this one by heart. And I'll give you the link real quick so that you can register. But if you're if you're in our community, you should have been invited to this, but I just want to make sure, just in case somebody did not get it, I want to make sure everybody has it. We are also doing what we call a boot camp. So earmark this for sure. Let me just copy this. I'm going to paste this in the chat for you. So here you go. Here's the URL. Here's the registration link. So that'll take you for the webinar tomorrow night. And then we are doing a boot camp the week of August 15th. It's going to be at noon Eastern for an hour every day. And we're going to have one that we do about financial aid. We're going to have one about college essays, one about test prep, one about outside scholarships, and wow, I'm spacing out on what the last one, hold on, I've got the page I can pull up and look, because just mark that on your calendars. If you're in our community, you will get invites to this. So if you're not getting stuff, you should, if you're not getting things and you're in MyCAP, definitely email us to support@collegeaidpro.com and just say, hey, I was on office hours with Peg and I'm not getting the invites to webinars and stuff. We'll make sure that you're on the list correctly. But yeah, we're going to be doing, here, I can just share this with you guys real quick. The boot camp, we're going to be doing the week of August 15th. And we're going to be sending out a deal so you can register, but we've got essays, scholarships, outside scholarships, test prep, and Common App. So all the stuff you're going to need, an hour a day. Again, that will be recorded as well. So I know it's not in the evening. So if you can't make it, it's no problem. You can just watch it for that hour in the evening at your leisure. So we have a lot of great stuff. We have a lot of great stuff going on. to help you guys and to support you through this process. So click on that link before we go out. And then the recording of this will also be posted in the community. In MyCAP, which is right along the top. There's a community up there that you can click on and put in your question. So I hope this was helpful. We're a few minutes over here. So everybody go, if you're on the West Coast, go make your dinner. If you're on the East Coast, go enjoy the rest of your evening. Stay cool, everybody, because it's pretty hot, I think, pretty much everywhere in the country right now. So have a great night.